Good morning, Larry Adams, Channel FSR, Central Illinois. Today I'm joined with Matt Bennett, grain consultant, and we're going to go back over what we learned in 2020 and moving forward to better days in 2021. So, Matt, I'm just going to kick it off to you. Been a wild year, right? Can you kind of go back through the year with us and kind of give me the highs and the lows and what you've seen?
We only have 10 minutes, Larry, so I don't know if I can hit all of them. But
Good point.
let's just say this: the start of the year, really, we were in pretty good shape. Markets were okay. Your spring insurance prices for corn and beans were like 917 and I believe 388. So those price levels weren't anything to brag about, but they weren't horrible. And then obviously we had a lot of issues in the world. From a geopolitical standpoint as well as pandemic standpoint, things like that. What that do for us? Well, it put our markets in a turmoil. And so essentially you saw corn and bean prices, pushing down into that $3 and below level, and then $8 and below level. And it scared all of us. And we thought, after 5 years of pretty rough, profit margins, profitability, if you will, this might be the worst of those years. And so it was a pretty decent growing season. Overall, I think everything went fairly well. As you know, there were some good crops, there were some bad crops, but for the most part, we were pushing record national soybean yields, which means a lot of people had really good bean yields. Corn crop was good, one of the better corn crops nationally we've ever had. So that means several guys, and gals had record corn crop as well. But come into the month of August and quite frankly, our markets were still in the doldrums. Wasn't all that rosy. And then we saw nothing but Chinese purchases for both corn and beans on a daily basis. Then it was nothing but up since then. And so we've rallied the bean market, essentially about $4. And we've taken the corn market up, a solid $1.30. And so talk about a Christmas gift. It's just been fantastic. It's been over a course of time, but it's been a really nice run in the markets here.
Yeah, so you brought up a couple points there. So the motion, obviously, from summer to now, right? With myself dealing with some of the producers out there is much better, right? So we've heard some things out there too, with the bean market being so strong as it is. Do you see acre shifts going that way, or do you see the soybeans actually pulling the corn along and keeping it normal?
Yeah, that's a really good question. I think, a couple of things that come to mind for me is that, a lot of producers that I talked to made more money on soybeans again in 2020. And so, in the state of Illinois, that would make like 7 out of 8 years now that overall, on average, soybeans actually netted more profit to the farm than corn. And that's one heck of a run because previous to that, we were on probably a 10-year run where corn had netted more, and so what do we do? Well, we got to look at price levels where we're at right now. We're within a dime of $11 on November 21 beans. I mean, that's just
Wow.
incredible, and then you look at December corn pushing on 420. Those price levels, I've got to think that you're going to see a fairly close mix as far as corn to bean acres go this next year. Could bean acres be more than corn acres? I think it's possible, but we have to keep in mind, we had just a beautiful fall. And so most of us were able to get all the field work done we ever wanted to get done, all the fertilizer on we wanted to get done. A lot of tile work happened. I mean, and then we're able to go in and still work the ground where the tile was just because the fall offered those opportunities. And typically when we see that kind of fall, a lot of times that bodes well for corn acres. So right now I'm 90 million plus on corn acres and bean acres. We got to remember that whenever you've got profitability, you're going to have acres show up, and so you're going to have more total acres this next year. There's no question in my mind. Right now, I'm probably 91 and 91.
Gotcha, gotcha. So, with a lot of the reports been coming out, where do you foresee potentially, anybody on the outside sources affecting the markets anymore in a negative or a positive way?
I think that there's a couple of things that come to mind. I mean, obviously, China has been just a huge, huge purchaser of both corn and beans from the U.S. perspective. Part of the reason the markets, especially bean markets, been so excited lately is, Argentina's been excessively dry, and typically they put about 50% plus, of the U.S. or the world soybean meal out on the market. And so anytime that you see dryness in Argentina, you typically see, a soybean meal rally, which spills over to a soybean rally, and obviously can spill over to everything else in the ag complex. And so that's part of the thing that's going on right now. If Argentina does not have their weather straightened out, there's no question in my mind we're seeing supportive, if not more, rally as far as the bean market goes. If that happens, you're probably going to see the same thing with corn. A couple of things also come to mind is that, when we talk about acreage, we got to keep in mind that wheat market's above $6 at this point. And so, you're going to see a fair amount of competition all the way around. And, there's a lot of different things can factor into our markets, but those are some of the bigger things. The last thing I definitely encourage us to keep a close eye on is, the US dollar. And so the US dollar has been at 3-year lows, essentially, for the last week or so. The day that we're talking here, we're actually seeing the dollar rally a little bit, but quite frankly, it's in a very bad place as far as a technical perspective. And most people feel like it could really just flat out plummet. And all that's going to do is make our exports even more competitive on the world market. So, but, last thing I'll say, Larry, as far as your question's concerned, I don't want us to get in the way of ourselves. We've had really good markets, but that doesn't mean that we're going to see the same prices next fall that we saw this fall. You've got this huge inverse in the market from cash beans to new crop beans, almost $1.50 at times. And so a lot of people are telling me, I don't want to sell 1050 beans or 1080 beans, because cash beans are 1220. We're totally losing sight of what's most important here. And what's most important is locking in profit margins. And so we just don't want to be our own worst enemy here.
So, for example, say I'm sitting on all my corn, soybeans from, what should I be doing right now in your mind?
Loaning me some money, because you've obviously made a really good decision on not selling anything. But if you haven't sold anything at this point in the game, stop and think about how much risk you have on the table compared to what you had previously. And you might say, well, it's a good fortune. I'm in really good position. Well, of course you are, but you're also very susceptible to, if you're going to go ahead and count your chickens right now, that's not a good strategy to have, because, this bean market could go down $2 in a matter of about 3 days. And we're all going to be staying around wondering what hit us. Now, I'm not saying that's going to happen, but if it does, and you don't have any risk management in place, you're going to be about as upset as a person can be. So what should you be doing? Well, if you don't want to market anything, go ahead and buy a put option or two. Just set a floor into the market. It helps you sleep at night. The other thing you can do is sell whenever the basis is really strong. And we all know the basis has been strong this year. When the basis is really strong, the market's trying to tell you want your bushels and want them now. You could go ahead and sell. And then if you want to stay in the market, buy yourself a call option or a strategy, spend 10, 15, 20 cents on corn. I'm spending 10 to 15 cents on beans. I'm spending 15 to 20, but I know that's the most I can lose. And so I don't mind selling and then re-owning. One last thing to keep in mind this fall, what you saw is, again, about a $4 rally in beans and a $1.20, $1.30, $1.40 rally in corn, and the basis improved at a time when we had a huge crop. That's something you're not going to see very often, but you don't want to just sit around and take it for granted it's going to stay around forever either.
Have you ever seen it like that though?
Not to this level. I haven't seen almost a record corn crop. And this corn crop was over 800 million bushels larger than last year's corn crop. And so we completely outdid last year's production, and then you saw this huge rally in the market. And at the same time, basis improved during the rally. That's just not something you see. Most of the time, whenever the market rallies, basis widens. I mean, we all know that. What's that telling me, though? That there's just not enough corn out there in the countryside. Same thing with beans. And so,
correct.
I think there's a lot of good things going for us. But then again, you never know when that next black swan event's going to happen. We have to be extremely cautious as to assume that we know all the information there is out there, because we don't.
So let's go to the other extreme. Say I sold everything already and I'm watching this market. Give me two little tidbits I could do to maybe try to capture some of that back in your mind.
Well, if you've already sold, chances are, given the kind of crops most of your guys had and gals had, they probably still made good money. And so if you're going to do something to try to capture any more upward momentum in the market, just make sure that you don't do something that's marginable, to where, and what I mean there is that if the market plummets, then you're putting money in the account every day. You don't want to make a so-so sale, a crappy sale, and you don't want to make a really good sale, a bad sale. And so
Sure.
we have to be very cautious as to try to get too cute with the market. The nice thing about a producer is that, if you're farming in 2021, you've still got more bushels to sell. Yeah, you might be out of your 20 bushels, but let's start focusing on 21 and how can we manage risk to the best of our ability for 2021 crop.
And I think you already touched on a little bit too, is like, for 2021, doing something, right? And I speak about this a lot, doing something's better than nothing. And
Mhm.
so what other recommendations would you have for 21? I mean, I
I
know you
think,
kind of hit on a little bit already, but
right.
anything else?
I think for 21, one thing that we like doing, for instance, we've gone over in marketing 101, some of the option strategies, one thing that we've done is we've set a floor into the market. So we bought a put option very close to where the market is. And then we actually sell a call above the market, maybe $1.40, $1.50 above the market. And what that's doing is it's capping how much we can get for beans if the market continues to rally, but it's also putting us a floor very close to where the market is today. And so if I'm going to complain about a 12.20 or a 12.30 soybean sale next fall, then I'm missing the point. I'm just trying to manage my risk as best I can. As far as corn goes, we've actually just straight up hedged some corn on the board, or you can do an HTA, but locking in some of that price, and then we're buying just kind of a cheap call that gets us out into that April time frame. And the reason I want to do that is I want to get past the planning intentions numbers. I want to get past the spring insurance. I want to get past some of the things that could provide us some excitement in this market and get as far through that South American corn crop as what I possibly can. Because if they do have production issues, I think that those calls could be worth quite a bit of money. And so I guess what I'm saying is if I'm going to get very aggressive on sales, I want to cover myself on both sides of things, stay flexible in the event that this market takes off and really goes.
Well, that's great, Matthew. I appreciate your time today. I think we hit on a lot of topics there and talked about 20 and moving forward to 21. I always all hope that we have a much better 21 this year than we had 20. I always said that, you never say it can get worse. I'm not going to say that today, and because I'm optimistic that's going to be much. So if anybody wants to get a hold of you, what's the best way to get a hold of you, Matthew, to ask questions or just to reach out to you?
Yeah, I think the easiest thing is just Chief321 on Twitter with my weekend newsletter. If people aren't on that, just go to channel.com to the marketing tab, get on the newsletter. And at the end of my newsletter, I always give plenty of ways to get a hold of me as well.
I appreciate it, Matthew. And if anybody wants to get a hold of me, it's AgAdams99 on Twitter also. And just wish everybody happy holidays and look forward to talking to you next time. Thanks, Matthew.
Yep. Thank you.